program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to The Global View, the show where we look at ways for investors to make money beyond the ASX-listed universe. I'm your host, Juliet Sali. Well, overnight, global equity markets were mostly higher to begin the week, with investors in Europe encouraged by progress on a peace deal between Ukraine and Russia. Meanwhile, increased expectations for a December rate cut from the Fed also boosted stocks on Wall Street. Gains among the mega-cap AI-related momentum stocks sent the Nasdaq soaring up 2.7%. Tesla and Alphabet led the way, with Alphabet closing in on a $4 trillion valuation, while Nvidia and Broadcom were other standout performers. Amazon says it will spend as much as $50 billion expanding its capacity to provide AI and high-performance computing services to US government entities. The retailers remain in focus as the US holiday shopping season kicks off this week with Thanksgiving Day, and earnings from consumer-oriented companies such as Best Buy expected later this week. Bristol Myers gained after European rival Bayer unveiled positive late-stage data for its cardiovascular drug, boosting confidence in Bristol's experimental drug candidate. Centene and Oscar Health gained on a report that President Trump is considering extending the Affordable Care Act subsidies for 2 years. Meanwhile, Federal Reserve Governor Christopher Waller says he's advocating for an interest rate cut in December, saying that his concern is mainly in the labour market in terms of the Fed's dual mandate. So he is advocating for a cut and said that you may see more of a meeting-by-meeting approach once they get to January. US economic growth will increase slightly next year, but employment gains will remain sluggish, and the Fed will slow any further rate cuts, according to economists polled by the US Business Economics Association. The median outlook was for growth of 2%, with respondents citing tariff impacts as the greatest downside risk to the economic outlook, and tougher immigration also seen as depressing growth. Meanwhile, on the geopolitical front, US and Ukrainian officials have sought compromise over a plan to end the war in Ukraine after agreeing to modify a US proposal. US Treasury yields declined on the possibility of an interest rate cut next month, the 2-year close to 3.5%, the 10-year at 4.04%. Markets pricing in a 70% chance of a 25 basis point cut at the December meeting. And the US dollar, relatively unchanged. The Aussie dollar is buying 64.6 US cents. In the commodities market, oil prices climbed on the prospect of a US rate cut in December. Brent futures up to $63 a barrel. Copper fell by 0.7%. Iron ore rose to $105 a tonne, and gold gained on those rate cut expectations, buying $4,110 an ounce. Bitcoin, meanwhile, having a little bit of a rebound, just getting back towards that $89,000 a coin. Let's get more on what's moving markets with Steve Sosnick from Interactive Brokers. Steve, you've got to have a strong stomach to be in this game. What has changed between what you saw on Monday and that sell-off that we saw last week?
Good morning, Juliet. What changed is the perception about the path of interest rates. It was looking pretty ugly Friday morning, our time, and then John Williams of the New York Fed basically sort of implied that he was amenable to a cut in December, and off we went. His voice has a higher weight than most of the others. The reason being, there's 3 permanent members of the Federal Open Market Committee. Well, there's the governors, but among the main people, you've got the chairman, the vice chairman, and the head of the New York Fed. And the reason for the New York Fed being there is because they are the ones who actually do the open market operations, which is the OM and FOMC, Federal Open Market Committee. So as a result, the markets really ran with that. Since then, we've had some other comments. You showed the comment from Governor Waller. You showed, there's also some comments from Dr. Stephen Myron, who really wants a 50 basis point cut, but he said if push comes to shove, he'll vote. He won't dissent. He'll vote for 25, figuring half a loaf is better than none. Mary Daly from the San Francisco Fed kind of alluded to the idea that cuts might be around us. And so as a result, we went from about a 35% chance of a cut to call it a 75 or more percent chance of a cut. That was a big turnaround, and that really put a floor under what had been a fairly precarious market.
When it comes to the tech stocks, though, and whether or not you stay away, whether you chase the little momentum that's going on, you have a sort of interesting point that it's a battle between FOMO and anti-FOMO here too.
Yeah, I mean, that's kind of what we're seeing. For much of the year, FOMO, I've been saying all along, it was FOMO and MOMO, momentum and fear of missing out. And the fear of missing out, people always have FOMO. I mean, that's just human nature. But a lot of the FOMO was coming from institutional investors. And institutional investors have a very defined sense of FOMO because it's career risk. If you are underperforming your benchmark, if you're the bottom quartile or whatever your measurement might be, bottom decile, you're not getting a bonus. You probably lose your job if you're bad enough. And so as a result, I think a lot of these portfolio managers had no choice but to sort of hold their nose and buy big cap tech. It's 40% of the S&P 500. It's more when you think about the Nasdaq. The momentum, the profits are all seeming to come from that sector. In that sector. We really started to turn around. The chart you show there shows you the damage that we had last week when we had that big spike to the upside and then the big downdraft afterwards. That was largely, the spike up was basically when, just the new phenomenon of forget buy and hold, it's buy and chase. So they chased this higher because as soon as we went up, off we went. But then, oddly enough, Bitcoin broke through 90,000 that day and down we went. That is normally a very perilous technical sign. What's called an outside bearish reversal or key reversal, where you have higher highs, lower lows. We didn't break out of it yesterday or today. That chart is through Friday. But the bottom line is, I do think you have to start to think about the idea of maybe organizing your trading around selling rallies along with buying dips. I think people were just looking to buy dips all along. That mentality may have changed, although I think we are getting a bit of a respite, and in a short week, like we have here in the U.S., holiday Thursday, half day on Friday, so everybody can either go into a food coma or go shopping, and so off we go.
And so then, is there been a change more broadly in institutional risk aversion, do you think, Steve?
Yes, I think that's coming from the institutions because basically now I think, the term I used today, it was a little clumsy. I got to come up with a better one, but like fear of locking in, Foley. Bear with me on that one. It'll need some work. But the bottom line is a lot, now you're getting to the point where they were afraid of missing their benchmarks. Now they're more at the point of not locking in profits when they can. A lot of institutional managers are having really good years. They're getting a bout of nerves from some of the valuations, from some of the performance, from some of the interlocking deals, from some of the need to just raise money, even from companies that spin off cash constantly are out there raising money in a big way. I think all those fears are sort of making a lot of portfolio managers who were, let's call them fully invested bears or holding their nose and buying. I think it's making them a little bit more nervous, a little more reticent to just step in and buy at the slightest provocation.
All right, Steve, we'll catch you on the other side of Turkey Day. Happy Thanksgiving, happy Black Friday. We'll see you next week. Thanks so much. Steve Sosnick.
Thanks, Juliet.
From Interactive Brokers. All right, a quick look at what we are expecting on the local market. We are expecting the rally to continue, futures up 0.4% there. And of course, we do have a little bit in terms of Web Travels come through with earnings. They were looking pretty good, and around 20 ASX listed companies are holding AGMs today. That does it for this edition of the Global View. Stick around, the Open is coming up next.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.